Okay, so you open up a document like this, a technical report, and whoa, it just looks like a wall of text, right? It's a bunch of numbers and acronyms that might as well be a foreign language. It's super easy to just say nope and close the tab. But I promise you, there is a story hidden inside all this data, and we are going to pull it out, piece by piece.
So, welcome. Today, we're going to do just that. We're breaking down this exact report for Amazon. The whole point here is to give you the tools to look past the jargon and see the signals that analysts are actually paying attention to. By the time we're done here, that wall of data is going to start looking a lot more like a roadmap.
All right, so first things first, let's get a handle on the basic concept we're even dealing with here. What we're looking at is something called technical analysis. Now, this isn't about how many Kindles Amazon sold or what their latest earnings report said. Nope. This is all about market psychology. The core idea is that all the hopes, fears, and guesses about a company are already baked into its stock price. So by studying the history, the patterns of that price, we might just find some clues about where it's headed next.
Okay, so if we're hunting for clues, the very first thing we need to figure out is the trend. What's the stock's general direction?
I love this analogy. It's just so perfect. Before you start worrying about how fast you're going or if the road gets a little bumpy, you gotta know the basics. Are you heading uphill, downhill, or is it just a long, flat stretch? That is exactly what trend indicators tell us about a stock. And one of the most popular ways to see that trend is with something called moving averages, or SMAs. Here are a few pulled right from our report. An SMA basically smooths out all the tiny daily up and down wiggles to show you a much clearer path. Analysts look at short-term ones, like a 5-day average, to see what's happening right now, and then they zoom out to longer-term ones, like the 200-day, to get the big picture.
And this is where it gets interesting. Let's compare Amazon's current price, around $232, to its 200-day average, which is closer to $217. So, what does this tell us? Well, when the current price is floating above its long-term average like this, technical analysts see that as a really good sign. It points to a healthy, positive uptrend, and it suggests that investors have had sustained confidence in the stock for a while.
So, we know the road is generally heading uphill. Great. But the next question is, how fast are we going? Is there any power behind this climb? This is where we measure something called momentum.
Exactly. Think about it. An uptrend is fantastic, but is it a strong, powerful trend that's picking up speed, or is it kind of starting to run out of gas and sputter? Momentum indicators are like our speedometer. They help us gauge the force behind the price moves. And a classic tool for the job is the Relative Strength Index, or RSI. You can think of it like a tachometer for the stock's engine. A reading way up over 70 is often seen as overbought, meaning the engine might be redlining, getting a little too hot, too fast. On the flip side, a reading below 30 is called oversold, which suggests the engine is running cold and maybe the stock is a bit unloved. So where does Amazon land? Well, our report puts its RSI at 54.39. It's not overbought, it's not oversold, it's just kind of cruising right in that neutral zone. This suggests that the current price movement is pretty balanced. For an investor, this can be a good thing. It could mean the uptrend has some real strength, but it's not totally out of control yet, which might leave more room to run.
All right, so we've got an uptrend with some balanced momentum. The last piece of the puzzle is volatility. This tells us just how wide the price swings are. Are we on a nice smooth highway, or is this a bumpy back road? And we can measure this with a tool called Bollinger Bands.
Think of Bollinger Bands as painting the lines on the highway. They create the expected lane for the stock price. The upper band, which the report says is at about $236, represents the statistically expected high point. A price usually doesn't spend a whole lot of time above this line.
Now, let's drop in our current price, $232.11. And as you can see, it's driving pretty comfortably right inside that lane, well below the upper edge. And here's the other side of the lane, the lower band, down at around $222. So our current price is well within these two boundaries. To an analyst, this is a sign that the current volatility is pretty normal. It's contained. The price isn't making any wild or unexpected swerves out of its lane. Okay, so we've looked at the trend, we've checked the momentum, and we've sized up the volatility. Now it's time to zoom back out and put all of these individual clues together to see what kind of big picture this report is really painting for us.
So what's the story? Well, the long-term trend looks positive, right? The price is above that key 200-day average, the momentum is balanced, not too hot, not too cold, and the volatility seems pretty normal with the price staying inside its expected channel. Altogether, this paints a picture of steady, controlled upward movement. And if you wanted to take all of that, plus the dozens of other little indicators buried in that report, and boil it all down to one single number, well, this is it. The report generates what it calls a technical score. And for Amazon, it's 34.76. It's their own proprietary formula, but it's an attempt to distill all that complexity into a single snapshot of the stock's technical health.
And that really brings us to the most important question, doesn't it? We've decoded the trend, the momentum, the volatility. But it's absolutely crucial to remember that technical analysis is all based on what's already happened. It's a powerful tool, for sure. It helps us understand probabilities and get a feel for the market's mood. But it is not a crystal ball. It can't guarantee the future. It shows you the road you've been on, but at the end of the day, you still have to drive the car.